welcome everybody to FinTips, really short videos that we do here where we just cover a really quick topic and then get right out of the way. My name is Dustin Tibbetts. I'm a financial advisor with Jazz Wealth Managers. We do a lot of these short videos in addition to our dojo videos and the closing beat where we go over the stock market and give you the full updates as to what happened for the day without the drama. Well, today we're going to talk about the U.S. markets relative to the overall global markets. Now, what's the history here? Can the U.S. markets do as well as they've done if the global markets start to get weak? What's the history? Does that make any sense at all? Well, here's the thing. If you take a look at the S&P 500, the NASDAQ, the Dow, the U.S. markets as a whole, you understand that over history they need to be sort of playing on the same playing field as the rest of the world. Now, we're going to take a look at a comparison chart. I'm going to show you how the rest of the world is doing relative to the U.S. and try to help you understand what's going on out there. Well, if you look at this chart here, the blue line at the very, very top, that's the S&P 500. That's our U.S. markets just killing it, doing quite well, or at least better than the rest of those lines you see below, which are China, Germany, Brazil, you've got Mexico in there and a few others. And so what's happening here is the rest of the world is now all of a sudden flatlining, right? And so that can't be a good thing. You see, if you go back to the middle of June, the S&P 500 continued trending higher while the rest of the world started to sell off a little bit. Now, while it can be that the U.S. is outperforming the other markets and still do quite well, what that generally means, if you look back in history, is that the U.S. can set higher highs and higher lows, essentially trending higher, while the rest of the world is also setting higher highs and higher lows, just at a lower return rate. So when that happens, yes, that everybody does fine, everything's good. When you start to see what's happening now, where the rest of the world is sort of chopping around, not doing anything, not so bad, really, the declines have mostly stopped around the world, but when that starts to happen, you either have money leave the U.S. and go try to support those other markets because they're trading at a discount and maybe there's a chance for greater returns there. There's a bunch of stories and arguments you could make for that. Or money leaves the U.S. and goes to the sidelines. You start getting people saying, I will wait, I will take my profit and wait for a discount. In either case, you might have an opportunity where the U.S. starts to pull back. And so for those of you that are thinking, well, I'd like the markets to fall a little bit so I could maybe start investing, or maybe you're trying to time everything or look for a better entry, this may be the first real sign that you could be onto something. So you really want to track, how do the rest of the world do? If they start moving in a downtrend, meaning lower lows and lower highs, it just keeps falling and falling and falling, even at a slower pace, you can look back all the way through history and find how the U.S. eventually got pulled down with it. This is not a market crash discussion. This is not a collapse or the end of the U.S. discussion. This is simply just the markets moving in unison with each other. Maybe it only means everything falls 2%, 5%, 10%, I don't know. But it means that there is definitely some weakness in there. Add to that the trade war, add to that the taxes that people, that are coming up here. Add to that the higher interest rates, the slower consumer spending. You may have a reason why the markets just need to take a break. Now again, we wouldn't be scared of that, of course. We make a towel here for all of our customers. It says the markets recover 100% of every decline, but you should know the stats on what to expect. Is that going to take 5 days? Is it going to take 5 years? Make sure you're invested correctly for where the markets are currently at. It doesn't mean sit on the sidelines. It doesn't mean go to cash. It means just understand your investments and understand how the markets work. Well, I hope that helps. Just a really, really quick blurb about the U.S. markets relative to the rest of the world. It is not an indication or a solicitation for you to go buy or sell or do anything. We just like to keep you updated with these little tiny things like that. It's the kind of thing we help our customers with constantly at Jazz Wealth with our Wine and Wealth classes that we do every single week. And so I hope you'll keep us in mind. If you have a old 401k to roll over, you're transferring accounts, or you're just starting fresh, we're happy to work with you. We give the advice, the financial guidance, and the investment expertise that you get at the large companies, but they don't want to work with you because you ain't got no money. So keep us in mind, and we'll talk to you soon.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.
watch one of our other great videos? Have you had a chance to see our new FinTips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.